Go Birds! You may or may not know, but the Webbers are from Philly. So we're all things Philly sports. Way to go, Eagles, with your big win in the Super Bowl. All right, from a mortgage side, let's talk about the important stuff. We had a slight rate improvement on mortgage rates. Despite Friday, we gave a little bit back. So what happened? Well, last week on Wednesday, we got some data that showed some weakness in the services sector of our economy. That helped average mortgage rates drop just below the 7% number. Unfortunately, Friday's jobs report came in better than was expected, and that hurt our rates a little bit, but not enough to keep them from finishing slightly better. They were just over 7%. I'll give you those current rates here in just a moment. What do we expect for this week? Well, it's a quiet day today, but we will hear from Fed speakers all week long. So how do Fed speakers impact us? Well, they kind of tell us what they're thinking about what's coming in the economy, and the traders use that to try to anticipate which way to go with their investments. What will we see from a data standpoint? We'll see CPI on Wednesday and PPI on Thursday. Now, these two reports are both big time inflation reports, the consumer price index and the producer price index. They both measure inflation, and that is still the number one thing that the Fed is watching as it decides when the next interest rate cut will come. Those are not mortgage rates, but they are the Fed funds rate, and they do impact rates. So where are rates right now? The 30 years at 7.03%, the 15 years at 6.42%, and the FHA 30-year is at 6.39%. Remember, those rates are from Mortgage News Daily. They are not your Weber mortgage rates. We are happy to quote you a rate quote. There's a decent chance you'll have even better rates than that, depending on your situation. So if you want to know specifics to you, pick up the phone and call us, shoot me a DM, or email me, and we'll be happy to get you an interest rate quote. So I'm working on trying to conglomerate what all the experts think mortgage rates are going to do over 2025. As a general rule, the trend is that we still see a prediction that rates are going to trickle down. But now, with Trump in office and having seen a few weeks of what he says he's going to do, those rate predictions are a little bit different than they were pre-election, when we didn't even know who the president was going to be. So be on the lookout for an upcoming email that will be a accumulator of all these rate predictions that will talk to you about where rates are predicted to go in 2025. With just on the surface, I can tell you, I still think a downward trend. We'll see a downward trend with slight upward bumps. So I would not sit on the sidelines and wait for interest rates if you're thinking about buying. I do think 2025 is going to be a great year to purchase a home. I think it's going to be a busy year. I think we have definitely seen the psyche of the consumer is saying, hey, maybe this 7% rate range is the new norm. And that means some of the people that have been on the sidelines for a couple years may go ahead and decide to jump in and make an offer on a house because they just know they're not going to get back to those 3% rates. So if you're thinking about buying, it's always the case that buying today is typically better than buying tomorrow. If we can answer any questions for you about rates this year or what to expect, please don't hesitate to give us a call or drop us a DM. We'd love to help you, because at Weber Mortgage, we are a family in the business of helping families.